This is the FCTO Daily Forex News Report for the 23rd of May 2013. Markets were rocked by speculation on whether the Fed would taper the stimulus program early. The Dow jumped to a record high of 15,542 following Fed Chairman Ben Bernanke's testimony, which suggested that the Fed is not near to scaling back the open-ended asset purchase. However, stocks reversed and dropped sharply to close down 80 points following the Federal Open Market Committee meeting minutes, which noted a number of policymakers were willing to taper the bond purchases as early as in June, as economic data shows evidence of sufficiently strong and sustained growth. Asian markets followed suit and were further weighed down by weak Chinese manufacturing data. Overall, the dollar remains generally firm, in particularly against commodity currencies. Fed Chairman Ben Bernanke said in his speech that labour market conditions have shown some improvements recently, but still remain weak overall. He also stated that in present circumstances, with short-term interest rates already close to zero, monetary policy does not have the capacity to fully offset an economic headwind of this magnitude, and the government needs to implement policies that reduce the federal deficit more gradually in the near term, but more substantially in the longer run. Yet concerning tapering quantitative easing, Bernanke stated that if policymakers see sustainable improvements in the economy, a step down in the pace of purchases in the next few months might be warranted, although he stressed careful consideration would be taken on this issue. The market responded vigorously after this comment. The Federal Open Market Committee meeting minutes for May appeared less dovish than Bernanke's comments, yet little information was added. The minutes suggest that policymakers saw modest improvements in the economy and the job market. A number of participants continued to believe that risks to growth remain skewed to the downside. Concerning the conditions for slowing down the pace of asset purchases, policymakers generally viewed that more confidence in continuous economic growth or diminished downside risks would be the key. Yet it noted in the minutes that a number of participants expressed willingness to adjust the flow of purchases downwards as early as the June meeting, if the economic information received by the time showed evidence of sufficiently stronger and sustained growth, without explaining what evidence means in detail. In China, the preliminary reading of the HSBC manufacturing PMI dropped to 49.6 in May. That's the first contraction reading in 7 months. HSBC noted that the cooling manufacturing activities in May reflected slower domestic demand and ongoing external headwinds, and it warned that a sequential slowdown is likely in Q2, which would cast downside risks to China's fragile growth recovery. The final reading will be released later on June 3rd, while the official manufacturing PMI will be released on June 1st. Looking ahead, PMI data from the Eurozone will be a major focus today, and a mild improvement is generally expected. The UK will release revision of Q1 GDP from the US, jobless claims, new home sales and house price index will all be featured. For all the news affecting the market throughout the day, join us at forexcurrencytradingonline.co.uk. That's forexcurrencytradingonline.co.uk.